Good day, everyone. Thanks for having me on, guys. Uh, I'm here to talk about a topic that's near and dear to my heart. It's, I would say, the bedrock of the HRA Hard Rock Analyst newsletters, really since their inception over 20 years ago. The newsletter itself tends to deal with two types of companies generally. One is early stage explorers that are working on or trying to find new discoveries in any metal. It doesn't really matter, although I tend to favor gold these days. The other type is companies that have a resource and that are moving that resource forward and improving it and starting to put economic parameters on it. There's a reason why I focus on those two areas. If you take a look at the screen, you'll see a copy of what's called the Lassonde Curve. Lassonde Curve is named after Pierre Lassonde, a fairly famous mine builder and entrepreneur in the mining sector. He's one of the founders of Franco-Nevada, which is the original royalty company, if you will. But he's also credited with several discoveries, chiefly in Nevada. Pierre's curve shows you sort of a sinuous value proposition that goes from early development of an exploration company through to production. And I would say, although the curve is exaggerated for effect, it's essentially true in terms of how the valuation metrics work for one of these companies. They're generally, fairly flat with maybe some slight upward movement if there's a bit of early success. The really large move in terms of both percentage gains and the speed at which those gains arrive happens when or if, obviously, a company makes a discovery that the market determines is potentially a mine, potentially an economic resource. During that usually 1 to 2 year period where the early stage exploration is going on, they're doing a lot of drilling, they're growing the resource. That's where you really see the price move up. Once they start putting economic parameters on it and they've sort of found the edges of the resource, then the valuation is somewhat set in stone and it flattens out. It might move a little bit with the commodity price. And then you'll get this period that's, 2 or 3 years long sometimes, where the stock sort of gets orphaned. And really what's happening is it's going into the feasibility process and the permitting process, neither of which generates a lot of exciting news and which can be drawn out. And normally what you see during this period is that the early shareholders, who are largely speculators, guys that were betting on drill holes and resource growth, they exit the stock, and that stock is generally bought by institutions that are more interested in playing the second wave of value appreciation you get, which is once you've got the permitting and the financing and you're building the mine. And usually during this period, the economic study's been done. There's a net asset value assigned to what this mine should be if everything goes according to the feasibility study. And during the period of construction and development and early production, the value of the company tends to go from a low percentage of that net asset value to close to equal to that net asset value. So you can get another wave where you can get, depends on the company again, but 50 or 100 or 200% over a couple of years during that development period. The kind of company we're going to talk about today is the one that's on that first upswing in the Lassonde Curve, the exploration company. What I look for in these companies is essentially there's 3 or 4 things. One is project. I tend to be project first. I'm looking for projects with a target metal that I'm interested in, which these days is basically gold. It has to have 2 or 3 things to get my interest. One is target scale. So that means even before they start drilling, I've got to see something in terms of geophysics. Maybe it's soil geochemistry, maybe it's trenching results, but something that shows me that there's a mineralized system there with enough scale to contain an ore body big enough to be a viable mine. The other thing I'd like to see, personally, I tend to prefer grade. I am one of those grade is king guys, so generally speaking, I like to see high grade in the early results, be it trenching or grab samples along with geochemistry. The other thing that you want to see with a company at this stage, and this is pretty important, I like to see a management group that includes someone who's got market and capital market experience. The thing to always remember with explorers is they're negative cash flow businesses. You have to be able to raise money. If you can't raise money, and ideally raise money in as little as with the least amount of dilution, um, you can have a great project that works out well, but you don't deliver a lot of gains for shareholders because you're blowing up the share float at the same time. That brings me to directly to the third thing I like to see, which is a good share structure. Ideally, what I want to see is one where most of the fundraising has been done, at or near the current price. I don't. I like to see that insiders have significant shareholdings, but I like to see that they actually paid some real money for those shareholdings, either in the form of getting it for projects that they put in that they expended real money to acquire and keep until they put them in the company, or that they've been writing checks to the company. I'm not a big fan of companies where you see millions and millions of shares at a tenth of a cent or hundredth of a cent. That tends to be an immediate turnoff for me. I like to see a fair share structure. Ideally, I like to see one where the share flow is still fairly tight when they start exploration, where there isn't a big overhang of, say, warrants from earlier placements that's going to impede movement in the share price if they do make a discovery. And the fourth thing that I look for, of course, is the management group itself. Like I said, I like to see somebody with capital market experience, but obviously you need to have a strong technical group. Exploration is a scientific endeavor after all. Ideally, it's nice to see people that have past successes, groups that have either had successes directly in terms of finding deposits or successes in terms of running companies that found deposits that were later put into production or vended to a larger company. There's two good reasons for that. One is a technical group that's had that kind of success in the past simply finds it much, much easier to raise money. They basically probably already have a group of backers that made money on them in the past, and they're happy to come in on new deals. And also, and people make their own luck. And while there's a great deal of luck involved in exploration, it does seem to be that some people are serially successful. There are many geologists that go through their entire career never making a major discovery. Others who make several of them during their career. I don't think that's just accidental. There's obviously something in the skill set that those winners have. And there's a good reason why the market tends to back guys that have made discoveries before, because quite often they make them again. So that's basically a simple summary of what I look for. I like to get in personally. I don't have a problem getting in pre-drilling. Obviously, you need to pick your comfort zone. A lot of people like to wait and see good drill results before they're willing to get in. The stock will be more expensive then, but obviously there's less risk. I'm sort of okay getting in pre-drilling, and normally once the drilling starts, obviously the other thing you want to see, and this goes back to the capital markets, you want to be sure the company's funded to do ideally at least one phase, but I'd rather see them funded to do a couple of phases of drilling. If the drilling is successful in any kind of decent market, they will be able to raise money. But just knowing that they've got the money up front is a big advantage. Because if the market knows company X has to raise money, one or two news releases out, there's going to be that much less reaction to the news. People will be selling because they know the company's going to turn around and raise money. So if they're funded 6 months or a year ahead, that makes their life easier, and it makes the stock a lot more able to react to good news. And news flow itself is important. I like to see ideally drill programs that are large enough, and talk to management and have some comfort that they realize that ideally what you want to be doing is not one big news release with 50 drill holes. While you're drilling, you want to be putting out news continuously and feeding the market, because the market needs to get continuous news flow. And I think if you can find a group that's got strong, high-grade targets, good drill campaigns coming on one or more projects, campaigns that are already funded, and with a management group that's already got the attention of the market, but that will have no trouble getting more attention if they make a discovery, that's a good recipe for potential gains with an exploration stock. And one of the best things about discovery stocks, if you can get one and own one early, is in my opinion, it's probably the one part of the curve, it's the one part of the sector where you can actually overcome a bad market. There's several instances of companies making really good discoveries in really bad markets that still deliver great gains. And also during that early discovery process, although ideally you want to have the price of the metal or exploring for going your way, it's not an absolute necessity. It can overcome short-term price swings in the metal. Traders don't care that much about whether gold or copper or whatever is up or down the day those drill results come out. They just care whether the drill results are good. They can carry the valuation regardless of what the metal is doing in the short term. So there you have it. It's not the low risk end of the sector. These aren't low risk stocks. If you're trading discovery plays or drill plays, as I call them, ideally you want to find a good one, get in early. If things are going well, you'll generally see some gains early in the drill program. You'll see anticipatory buying. Use that to your advantage to do a bit of trading and bring your costs down, and understand that there is a lot of luck involved in this. You're rolling the dice, but if the dice come up your way, it can be a really big win.